Hello and welcome to myfinanceteacher.org. Let's talk about gold again, and I am quite excited about gold. I think the future is bright over the next several months. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. So let's jump into the details. The US dollar. This is the daily chart of DXY, the US dollar index in front of you. And we see that dollar is breaking below the lower range of the Bollinger Bands. And RSI is very close to oversold levels. So we might see a short-term bounce in the dollar relatively soon. Within the cycles, it fits into a daily cycle bounce. Let's say this double bottom gives us an intermediate cycle bottom, which was the completion of the previous intermediate cycle between the end of June and into that double bottom. Since then, our first daily cycle in this new intermediate cycle in the US dollar has already given us a lower low, and that is a very bad sign, a very bearish sign for the whole intermediate cycle. So even though it looks like we're nearly finished with this daily cycle, and over the next several days we might see a bounce into the second daily cycle, still, in the intermediate term, since the first daily cycle has already given us a lower low, it's likely that the rest of the daily cycles are also going to give us either a drift down or drift sideways. A significant strength in the US dollar for the remainder of this half-a-year cycle is unlikely. So on the dollar, I'm bullish only over the next several days, a week or two. In the intermediate term, I'm bearish on the US dollar. And that, of course, is going to be really good for gold. So moving into gold, what do we see here? Over the last couple of weeks, gold has been knocking repeatedly on that 50-day moving average, which seems to be a pretty nice resistance at the moment. But as we know, and as I mentioned in a lot of my videos, when we knock on the resistance zone multiple times, it means that the market really wants to see the price above that resistance zone. And every time we knock, resistance becomes a little bit weaker. So that's one of the positive indicators that I see on this chart for gold. If you zoom in a little bit, another positive thing I see on the chart is that over the last several weeks, that's from early November, we see a series of higher lows. If I connect these lows, I'm going to see an upward slope line, and we see a series of higher highs. So for about a month already, we seem to be in an upward channel, even though the upward momentum is not strong at all at the moment. And that gives us this narrowing Bollinger Bands, the fact that price is going almost horizontally, but still with a slight upward bias, gives us narrowing Bollinger Bands. As I mentioned in the past, narrow Bollinger Bands often take place before a significant or violent move in either of the directions, up or down. Moving on to the cycles, the normal duration for an intermediate cycle tells me that a violent move up is much more likely than a violent move down in gold. The ongoing cycle started somewhere here at the beginning of May, so let's put it somewhere in the middle of that double bottom here at the very end of April, very beginning of May. It topped in September, and we have possibly seen the bottom of that intermediate cycle in early November, or even if we see a lower low again, still, based on the duration, normal duration for these cycles, I think we are very close to the next intermediate cycle advance. So even if gold temporarily weakens as dollar becomes strong only over a short term, over the medium term into the next intermediate cycle, I think the violent move is much more likely to come to the upside. Moving on to other positive developments on the chart. Since September, gold has given time to this 200-day moving average to catch up with the price, so I'm much more comfortable to enter positions now that the 200-day moving average is only 4% below the price than in, let's say, mid-September, when everybody was excited with this gold rally, but 200-day moving average was over 10% below the price. Looking at RSI for gold, although here at the beginning of November, RSI didn't really dip into oversold territory, and of course you would be much more comfortable buying when RSI is oversold. Still, at least over the last month, RSI is not diverging from the price action, and we see some sort of a confirmation of higher lows on RSI as well, and that is another positive sign for gold. Moving on to gold miners, GDX daily chart in front of you. As I mentioned in my previous video, we saw this pattern of a bull wedge on GDX. A few days ago, looks like GDX broke out of that bull wedge. Into middle of December, GDX retested the breakout and it's looking strong again, which is a really good sign. And over the last week, it mainly closed above that 50-day moving average, which of course is also a positive sign. So I see a lot of positive signs on gold and gold-related assets. The only thing that is still a concern for me is, of course, the COT positions, commitment of traders. We see that currently the commercials, this red line, which are known to be the smart money, are extremely negative on gold. And usually these smart money, these commercials, are close to neutral just before the intermediate cycle rallies. So here, for example, in May this year, commercials were only slightly negative in their positions. Here, in summer last year, net positions of commercials was neutral. Here, in late 2018 and middle of 2018, commercials again were only slightly negative in their net positions. Here in late 2017, a bit of a significant net position for commercials, and another very significant net position for commercials here in the middle of 2016, which is basically in the last 5 years the only other example when commercials were very negative in their net positions before an intermediate cycle rally brought gold from 1200 all the way up to nearly 1400. So COT is a little bit of a concern, but I see many more positive signs for gold rather than negative. So in my personal position, for that reason, I'm already 80% allocated to gold and silver related assets. And even if we see a dip towards 200-day moving average on gold over the next several days, as dollar becomes stronger temporarily, I will just see it as a chance to allocate another 10 or 20% of my cash in precious metals related portfolio in expectation of that rise. And the rise, in my opinion, will probably bring us at least towards 1600 on gold. And that might actually take place by possibly by March or April. So again, although there is a chance of another dip towards 200-day moving average, I don't suggest waiting for that chance. It might not actually happen, and we might already be in the new intermediate cycle since early to mid-November. So as I mentioned, personally, I'm already 80% allocated, and I think it would be wise to have at least some percentage of your portfolio allocated towards precious metals. You know what else would be wise? Hitting that like button, and even more so, subscribing to the channel. Have a nice weekend and good luck in your trades.